Right now, the sell-off is intensifying as most indices ended in the red with some sharp cuts today. The Nifty closing at its lowest point in 2018, breaching the 10,250 mark. This was the fifth session of negative ending for the March series. The Sensex also ended with cuts of more than 425 points. Mid-caps managed to hold on to the 19,000 mark. Banks led the decline. Anuj joins us now to wrap up today's trading action. Anuj, what led to the sudden fall today?
Well, what a bad day for the market today. The fresh 2018 lows are here now for most indices, for the Nifty as well. The Bank Nifty is convincingly below the 200-day moving average. Advance decline started at 7:1 in favor of advances, ended at 1:5 in favor of declines. And most sectoral indices, even the IT index was not spared. What's wrong with this market? Essentially, our market is falling under our own weight. The US markets were up. Hang Seng was up 600 points today. The fear factor has taken over the Indian market. On every rally, the market is being sold into, and today that gap up was sold into. Banking in particular is seeing panic selling now, and the fear now is that is the problem moving on from PNB to the larger private banks? That will then become a systemic issue. So stocks like ICICI and Axis were down today. FIs have been selling on all levels, and the DI buying support has also been waning a bit over the last 3 or 4 days. No point talking to too many stocks, but if you want to take a look at the big ones, the big banks were down, of course. Mahindra & Mahindra, TCS, Maruti, Tata Motors, all of them were down. And in the F&O space, stocks like Adani Enterprises, Balrampur Chini, BEML, the PSU banks like Indian Bank, they were all down. Right now, as I said, it's a bit of a fear factor playing out. The markets are trading at fresh 2018 lows, and our markets are now underperforming global markets by a distance.
All right, so 2018 lows for our markets. Anuj, thanks very much for that. Joining us now to take that conversation forward, Gautam Shah, Associate Director of JM Financial, and Ajay Srivastava, the CEO of Dimensions Corporate Finance Services. Ajay, let me start by asking you, we just heard Anuj there talking about how our market is now decoupled from what's happening in the global markets, which continue to move forward. We seem to be weighed down by domestic factors, by local factors. What's causing the fear?
I think, Shereen, one thing is very clear, that what we had apprehended is coming true. The credit market is heading into a major gridlock. The PSU banks, which are the biggest suppliers of credit to the MSME sectors, to the export sectors, have almost clamped down 100% on any disbursement. You talk to anybody, they're saying documentation has become 200% and there's no money coming through. When you appreciate, when you look at a credit gridlock, it is going to roll into other banks as well, because the suppliers will not be able to pay their loans and the people can't pay the EMIs. And it's going to, the cascading effect is what's bothering the market to say that the knee-jerk response to this whole crisis which has come around, which is arresting bank officials and everything. Where do you think bank officials are going to do? They're not going to give you any money. If they don't give money, the credit gridlock is going to hamper the economy in a big way. So at this point of time, the sheer factor that credit gridlock is going to impact us in a big way. And the number two is RBI in a position to categorically say that two other private banks, which is Axis and ICICI, are they kosher?
Yeah.
Axis Bank chairman just got fined today for wrong declaration of NPAs. Now, these two banks had a checkered history. So if you sum total PSU banks and two of the largest private banks, you're talking of a full-blown crisis. And in a crisis, you do one thing. You lock in your profits and you sell.
Okay, Gautam, would you agree with what you just heard there from Ajay, that this possibility of a credit freeze or a credit gridlock that Ajay was talking about, that's going to now have implications not just for the banking space, but for the larger economy, where one was hoping that we would actually see a revival as far as the investment cycle was concerned? That is now going to go awry. Is that what you fear as well? And is that what the market is now factoring in?
Well, I guess so. And I think it's quite worrisome, because 2017 was a year wherein the buy on dip strategy worked wonderfully. And suddenly in the last 6 weeks, you've had a stance wherein the market is being sold on rallies. So clearly the trend texture has changed, and it's almost as if the market has to deal with a relay of bad news. It started off with the budget announcement, then the PNB episode, the US market performance, the fact that bond yields globally have hardened quite a bit, and now the trade war fears. So all of these factors, I think, will affect the markets, at least from a near-term perspective. And I think this market requires a little more price and time consolidation. So another 4-5% on the downside is something that one has to work with. And more than anything else, the market needs to stabilize at a particular level. And the U.S. market setup is not helping because, we are of the opinion that the U.S. markets could actually be in for much more downside from these levels. So, if that plays out, then India will definitely be impacted.
Okay, Ajay, would you agree with what Gautam just said, that we could expect another 4 to 5% downside move from the current levels?
I think it just depends. Shereen, I am not so pessimistic. I think it just depends the way the government responds to this crisis. I think if there is a clear move by RBI to kind of isolate this problem, see that the credit system starts to flow through very quickly in the economy, reassures that lots of money coming into the system, I think you can retrieve the situation. Because the good part is that Indian economy, by and large, 60% of the heavyweights do not have too much of debt to carry. So I think to that extent, if you've got a portfolio built up of those stocks, I think you can weather this storm. The worry is that the lightweights are going to get blown in the storm. So 4 to 5% is what? It's 400 points on the Nifty, really speaking, which could happen any day. But I would still say that the large caps, I think, should be now stabilizing anytime soon. And there is where the sanctuary is going to be for the next 8 to 12 months. And remember, this is not about just the banking crisis. Also, we are now in the next quarter, we'll start looking at the political ramification in the next election. So new money commitment, I think, will be a big issue in the next 3 months. That who are the new buyers? All of us went into this market over-invested, Shereen, and now we are not finding enough liquidity to buy the bargains, quote-unquote bargains. That's a big problem. And next quarter, what I see is there'll be not enough people willing to commit capital with the government heading into the elections. So I think it's all about, I think, next quarter, and this whole redressal of the present situation is going to be what steps the government and RBI take to address the credit thing. Number 2, liquidity. Will the mutual fund also now continue to sell? They sold yesterday. Will they sell? I don't know the numbers today. But if they start selling, then you can't hold this market.
Gautam, I'll end by asking you that question, the point that was raised there by Ajay on liquidity, because FII selling, as Anuj was pointing out, has only accentuated, and so far we've seen DII supporting our market. But given the factors that we now have to contend with, is that going to be a concern as well, the lack of DII support?
Oh, I think so, Shereen. And I think if you actually look at the F&O data, what you'll notice is that the FIs have more shorts than longs in the system right now. This is something that we've not seen in a very, very long time. And the kind of figures that we see on a day-to-day basis, I think it's quite concerning. Even though 2017 was a year wherein we all spoke about domestic liquidity, but that's not helping in the current environment. And I think going forward, it's really going to be about global markets. And globally, the way the bond yields are, and given some of the political factors, I guess this market has to deal with a lot more problems before it can actually stabilize.
Okay, in fact, as we speak, at least on the banking issue, and Ajay, I'll get you to comment on this. We've just got news coming in. Axis Bank basically suggesting that their exposure to Nirav Modi as well as Gitanjali is nearly 200 crores. And I think, also this issue of the summons to Chanda Kochhar and Axis Bank CEO Shikha Sharma blown a little bit out of proportion. Again, as sources are telling us that neither of them were part of the representation at the SFIO today. Representatives of both ICICI Bank and Axis Bank made presentations to the SFIO, answered their queries. A quick comment from you, Ajay, on that.
It doesn't matter. I think there have been too many slips in both the banks to warrant the continuation of the leadership team. And I think the investors will be reassured if there is a serious change in leadership in both the institutions, because these two are systemically important institutions for this country's banking. It doesn't matter whether they went personally, didn't go personally. To get fined for wrong statement of NPAs on top of what happened in the last audit report, on top of all the problems the bank had, I think the bank directors need to be accountable to ensure the leadership changes, new clean leadership comes in, and people and investors are reassured that there are no skeletons hiding inside. They didn't come up with the Nirav Modi exposure for the last 15 days till this matter was a thing.
Sure.
It's come up today. So any management which hides information, I think needs to go, because this is not an environment where we want wrong information, rumors spooking the investors and depositors. You don't want that. When I said RBI decisive action means look at the leadership and say we need to change, we need to reassure people that everything is kosher on the balance sheet. Otherwise, rumor mill will take over.
Ajay Srivastava and Gautam Shah, appreciate you joining us to take us through why our markets are falling and where we could be headed next. Thanks very much for your time here on